Hello, today is Saturday, August 22nd, 2026. Here is your daily signal. According to Fortune, U.S. Treasury Secretary Scott Bessent has become the most interventionist Treasury chief in decades, launching expanded bond buyback strategies and yen purchases in an effort to manage the surging national debt, which stands at $40 trillion as of August 2026. The debt crisis has prompted renewed policy debates, with Bessent stating to CNBC, "There's nothing magic about the $40 trillion number. We can grow our way out of that." Domestic bond repurchases and foreign exchange activities, notably yen purchases, have marked a more activist approach, though financial institutions like ING remain skeptical, with ING describing the $4 billion bond buyback plan as rearranging deck chairs on the Titanic in Fortune's coverage. Key numbers include the record $40 trillion national debt and the $4 billion bond repurchase plan announced by Treasury. These interventions may provide temporary liquidity but are unlikely to materially reduce the debt burden. ING's doubts may undermine investor confidence and push yields higher, while the expanded interventionism could trigger volatility in currency markets. Over the medium term, widening deficits may limit the Treasury's effectiveness and fuel longer-term concerns about debt sustainability. Next, let's look at how labor actions and demographics are affecting U.S. retail giants. Fortune reports that Walmart's sales growth has dropped to a 6-year low, a decline driven in part by middle American shoppers participating in strikes even as the retailer continues to attract more customers earning over $100,000. Change in consumer demographics are reshaping the retail landscape, and government interventions such as tariff refunds play a growing role. As seen with Target's recent comeback, Target recorded a 3.8% sales rise this quarter, boosted by a nearly $1 billion government tariff refund that contributed $1.65 of its $4.11 in quarterly earnings. Both Walmart and Target are responding to fluctuating consumer demand, labor actions, and a shift in spending patterns by adapting their strategies for resilience. Key facts include Walmart's 6-year low in sales growth and Target's government-backed earnings boost. Retailers may need to ramp up efforts to attract higher-income shoppers and diversify their offerings, while dependence on government aid could shape future stability and strategies. Operational changes such as cost management and store reconfiguration are likely as strikes and demographic shifts persist, and medium-term effects may involve shifts in employment practices as retailers invest in technology and adapt to the evolving market. Moving on, let's explore recent developments in enterprise AI adoption. TechCrunch reveals that OpenAI is gaining ground on Anthropic among business users, with new data showing enterprises increasingly willing to switch providers as each lab releases updated AI models. OpenAI and Anthropic remain the top generative AI providers for businesses in 2026, with adoption rates fluctuating based on model launches and innovation cycles. Enterprise AI spending is notably volatile, prompting both labs investors to question the stickiness of business contracts. The latest indicators show that OpenAI is pulling ahead in attracting business users. However, enterprises have demonstrated little long-term loyalty, switching back and forth based on new releases. This dynamic may prevent either company from establishing a stable market share in the near term. Sustained volatility in enterprise adoption could lead both labs to change pricing or adjust product offerings, and investor confidence may waver, potentially impacting future funding and strategic direction. Rapid competition promises continued innovation, but makes long-term contracts and partnerships more challenging for the AI sector. Now, onto the markets. International equities posted broad gains, with Germany's EWG up nearly 7% month-over-month and EWD up more than 6%, while France's EWQ added over 3%. The United Kingdom's EWU advanced more than 3.5%. And Spain's EWP led with a daily gain of just over 1%. Japan's EWJ jumped 9.6% day over day and over 3% for the month, and India's INDA showed a modest 1.8% day over day gain. Africa's AFK surged with a standout 15.5% monthly jump. Commodities rallied with gold GLD up about 11.7% for the month and silver SLV soaring by 16%. U.S. oil USO traded flat day over day, while platinum PPLT climbed over 14% for the month. Uranium URA topped the group with a 12.4% monthly rise. Corn gained nearly 4% for the month, but natural gas UNG fell almost 6% over the same period. In U.S. favorites, Adobe rallied more than 26% for the month, Oracle jumped 16%, and Microsoft MSFD advanced 24%. Nvidia NVDA was down nearly 1%, while AMD tumbled 14% for the month, and Apple lost around 5%. Among today's top gainers, RF Acquisition RFI soared over 226%. Megan Holdings MGN plunged 97.6%, leading the session's major losers. That's it for today. You can find more news and details on our website. Goodbye.